Ireland's USC hits your gross income the moment you earn more than €13,000 a year. It runs from 0.5% all the way to 8%. Nobody warned you. Here is exactly what it costs you. You land a job in Ireland. Your employer hands you your first payslip. You expected income tax. But there is a second charge sitting right underneath it, the Universal Social Charge, or USC. It is one of Ireland's 3 payroll deductions, and the one most people find confusing. Unlike income tax, USC is not reduced by tax credits. Once you cross the €13,000 threshold, even by a single euro, the charge applies to your entire income from the first euro earned, not just the amount above €13,000. That is the part that shocks every new worker. Your employer deducts it automatically. You never agreed to it. You just see it gone. USC was introduced in 2011 to replace the health levy and the income levy, and is collected by revenue through the PAYE system. It is a separate tax on your gross income that sits alongside income tax and PRSI on every Irish payslip. It has its own rates, its own bands, and critically, your tax credits cannot reduce it. There is no relief from USC for employee pension contributions either. The legal basis sits in Part 18D of the Taxes Consolidation Act. Revenue administers it. You can read the full rules at revenue.ie. Since January 1, 2026, Ireland's national minimum wage is €14.15 per hour. A full-time worker on that rate earns roughly €28,696 gross per year. On that income, USC is charged at 0.5% on the first €12,012, then 2% up to €28,700. That means a minimum wage worker pays over €500 a year in USC alone, before income tax or PRSI. On top of USC, most employees pay PRSI at 4.2% of gross pay until the end of September 2026, rising to 4.35% from October 1, 2026. Income tax then runs at 20% on income up to your standard rate cutoff, €44,000 for a single person, and 40% above it. 3 separate deductions. All hitting before a single euro reaches your account. First, register your new job with Revenue before your first payday. If your employer has not received your tax credit certificate, you land on emergency tax, a flat 8% USC on all income. Avoiding this is straightforward. Register your new employment through My Account at revenue.ie before your first payday. Second, check your payslip line by line. You are looking for 3 separate deductions: income tax, USC, and PRSI. If USC is missing or wrong, contact Revenue directly at revenue.ie. Third, claim every credit you are entitled to. Tax credits reduce your income tax liability euro for euro, unlike deductions, which only reduce taxable income. Log into My Account at revenue.ie and check your credits today. We have written the full breakdown with a worked payslip example for every salary level. Find the link in the description and run your own numbers for free at EuroDuty.eu.